Market trends. In Forex, we have three major trends that can occur. We have the uptrend, we have the sideways trend, and we have the downtrend. Those are the three basic trends that we have in Forex trading. An uptrend is when the market makes a series of higher highs and higher lows. That is when the direction of the change of the market keeps rising. That's when you have an uptrend. A sideways trend is where the highs and the lows are similar. That is, they are almost the same. You can call this also consolidation. That is, the market is actually moving sideways. It hasn't picked a direction yet. And lastly, we have the downtrend. The downtrend is when the market keeps forming lower highs and lower lows. That is, the highs keep getting low and the low keep getting lower. So in that case, you have something going down like this, which is a downtrend. All right, market trends. In Forex, we have three major trends the market can go, as I explained earlier. So I want to further explain to you or show you how those trends are. In an uptrend, the three trends, are the uptrend, the sideways trend, and the downtrend. Now, in an uptrend, the market usually makes series of higher highs and higher lows. So let's see what we mean by that. The market doesn't just go straight in one direction. It actually plays around, goes up and down, but in the general form, you discover that it's going in a particular direction. So let's look at an example of how the market moves. So the market moves in a fashion like this: up, down, up, down, up, down, up, down, up. Right? Now, this is called a low. This is a high. Low, high. They are represented by anywhere the market changes direction significantly. All right? So we have the high, we have the low. We have a higher high, which means that this high is higher than this high. Remember, we're always comparing it based on price. So the price here, if you trace it, is higher than the price here. The same thing here, we have a low, we have a higher low. That means this low is higher than this low. This low, higher low, is higher than this low here. This low here is also another higher low, is higher than this. And this high here is higher than this high. This high is higher than this high. And that's how you define an uptrend. An uptrend is a market condition where the market price keeps making higher highs and higher lows over a period of time. So this is an uptrend. The next type of trend we have is the sideways trend, or a consolidating market. The consolidating market, or the sideways trend, makes similar highs and similar lows. It might not be the same. Some highs might be a little bit higher than the rest, but when you look at it collectively, you find out that they are making similar lows and similar highs. So the highs are kind of the same. We have low, 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 low. And this kind of movement in the market is called a consolidation. That means we have almost the same buying and selling pressure. The buyers and the sellers, the strength is almost the same. So it's an indecision phase of the market. The market has not decided what direction to go. And usually you see this kind of trends at the beginning or at the end of a downtrend or an uptrend. The last one we have is the downtrend, which looks something similar to this, right? So we have a high here because the price here is the highest. We have a low. Now, in a downtrend, you will discover that the highs keep getting lower. So we have a lower high, that is, this high is lower than this high. This high is lower than this high. A lower high, sorry, LH. Lower high, lower high, lower high. That means this high is lower than this one. This one is lower than this. Then the lows keep getting lower. So we have a lower low, a lower low, lower low, lower low, lower low. And if you check it, you discover that the market, overall direction of the market is going down. And that's why we call it a downtrend. So on a downtrend, the market keeps making lower highs and lower lows. We're going to be looking at trends in a real chart. So we're using GBP USD chart as an example to identify the various trends we can see. All right, so the first thing you need to do is to identify the highs and the lows so that you mark them. Remember that an uptrend is a market condition where the market keeps making higher highs and higher lows. A consolidating market is a situation where the market keeps making similar highs and similar lows, while a downtrend is a market condition where the price keeps making lower highs and lower lows. So let's mark out the highs and the lows. So we have one here as the low. We have a higher low here. We have a high here. We have a higher high here. Sorry. We have a higher high here. We have a higher low here. We have a higher high here. We have a higher low here. We have a higher high here. We have a higher low here. We have actually it's here next, right? Then we have a lower high, because this high is lower than this previous low. So this is the first place where we started seeing signs that this trend is going to change. So let me just mark it out so that we see what we're saying. So we have a high. Alright, so we have our first high here. Then we have a low. We have a low here. Right. So now the next one is a higher high. We have a higher high. You can just type HH as higher high. Then next we have a higher low, or HL. Right. So in an uptrend, we have series of higher highs and higher lows. So we have another higher low here. It's a low, but it's higher than this one. Check again. We still have another low here. This is a low, and it's higher than this low. Here we have a higher high. This is a high, but it's higher than this high. Then we have another one here. So this is another high, but this high is higher than this one. Now we have a new high, which is this, but this high is actually not higher than this one, so we call it a lower high. Lower high. All right. So, but since we're trying to identify an uptrend, we can actually just stop here for this. All right. So we have in an uptrend, we have a series of higher highs and higher lows, as you can see. So one thing you can do is to connect the lows that's the higher lows or the lows of the trend to give you like a trend line, or we call a trend line, so that you see that, okay, this thing is actually going up. If you connect the highs, you have what we call the channel. something like a channel where price moves in between. All right, so this is how you identify trends in a real chart. So let's look at another trend that happened after this. If you see this zone here, you discover that we have the market making similar highs and similar lows. So this we call a consolidation from this zone here. The market kept making similar highs and lows. This was where the market broke out of this range. So in this case, we'll mark it as just highs and lows since they are similar. Remember what I told you. The price might not be exactly the same, but it will look similar. So we just mark it as highs and lows. Right, so you can see this high is similar to this one. Okay, so I'll delete this. So this high is similar to this. This one is similar to this. This is similar to this. We have another high here, even though it's lower than the other high, it's still similar. It's close to that range, so we can mark this as high, high, high. Then we have the lows. We have the first low here. As you can see, these other lows are similar, as the distance is similar, so you can just assume that they're the same low here. All right, so we have series of highs and series of lows that are similar. That's what gives us a consolidating market. So after the market went out of this uptrend, it came and formed a consolidation, an indecision, and finally it broke out of that consolidation. And if you check the market now, you discover that we've started a new trend. You join these highs here, you discover that this high now has given birth to a lower high. From here. Okay. All right, so here we have a high, but this high is lower than the previous high, so we're going to call it a lower high. Lower high. All right, so this zone here, this point here is a high, but this high is lower than this high here. That's why we call it a lower high. Then here we have a low. We also have a low here. This point here is a low. So, but here we're able to form a lower low. This low here is lower than this one. Now, if you check, we have another lower high here, this point here, where the market came up, even though it didn't go far, it just came up a little bit. And now we have another lower low form, lower high, sorry, here. It's trying to form. I won't say it's formed fully yet, but it's trying to form here. Then here we have a lower low. All right, so if you check this from the definition of a downtrend, we are actually currently on a downtrend. That is, the market is making series of lower highs and lower lows. So now, in this market condition, we're able to identify an uptrend, a sideways trend, and a downtrend.